Hello traders, Gary Wagner here. Approximately 12:30 in Honolulu and 5:30 in New York on Monday, 28th day of February 2022, and this is the daily report for gold and silver. The financial markets continue to react to Russia's invasion of Ukraine last week. The fighting has escalated, and today the Ukrainian government officially applied to be part of the European Union and NATO. That will certainly complicate any peaceful resolution of the current conflict. The precious metals, with the exception of platinum, did very well today. Gold gained 1.22% and is currently fixed at $1,910.60. Of course, we do have a long position that we entered on Friday at $1,893 per ounce. We'll talk about that during the show when we pull up our charts and look at some technical studies. As you can see, the dollar had slight gains today, currently up almost 0.1% at 96.705. Silver had strong gains today, just over 2%. And when you add an additional 49 cents of value, which is the outcome of trading today, we have the most active contract of silver futures, currently fixed at $24.50. Palladium had the largest percentage gain today, a gain of 5.58% or $131 per ounce, with palladium futures currently fixed at $2,492.50. On today's show, I want to focus upon our current trade, which we placed on Friday. I want to discuss the stop, where we are looking to trail our stop up to, and at what pace we feel is most prudent. And we will end the show with our interim forecast that will include our exit strategy. First, we entered a trade on Friday. The entry price was $1,893 per ounce. It occurred on this candle, and you can see the line that goes through that representing where we got in, which was absolutely towards the bottom of the range. Today, gold prices opened right at our entry price, traded to a high well above $1,930, but closed slightly lower on the day when compared to the open, but again, as we said at the beginning, of roughly $23, with current April gold fixed at $1,910.60. Currently, we do have our stop sitting at $1,874. We talked about the rationale for placing our stop on Friday, and that was to put it below these series of lows that came in. With current pricing just above 1900 at 1910, I feel it's prudent to maintain our current stop. It is important that we look at our exit strategy now that we have placed our trade as well as our stop, and gold is above the entry price. In terms of my long-term forecast, I believe that gold will challenge prices at the all-time high, at least above 2,000. But as far as this trade and this particular leg are concerned, my current exit strategy is that we get out at approximately $1,975, and that is based upon the belief that we will see gold rise and close above the highs that were achieved last week. We could see a dip at that point. We could see the market go straight through that to higher pricing. The volatile nature of the current crisis in Ukraine could be the defining force of where this market will go to and when it will correct. Lastly, I do want to cover current levels of technical resistance. The first area of resistance I did cover in our last segment, and it matches this particular top right here, which is also where I'm pegging current resistance. That comes in at around 1920. However, I believe that what is achievable is to take out this double top that occurs at approximately 1960 as the real next level of resistance. We did take it out on an intraday basis last week, but I believe that what we could see rather quickly, possibly even this week, is for gold to take out that price point on a closing basis. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.